Good day, everyone. Well, it's interesting, very interesting times for our markets. First of all, we have seen a collapse of leading stocks. The price leaders like Acacia and Twilio have been absolutely decimated. And then we've also seen just a host of names that just can't muster any sort of bounce and then turned around and broke down. Also, we've got divergences in the in the major averages. The Russell 2000 is the weakest, showing that institutional money is not interested in taking any kind of risk at this point. You've got the Nasdaq, which has been the strongest because, and Nasdaq 100 being the strongest index, because it's comprised of all the super cap names, and that's where QE-based money has to flow. Or let's say it's one of the areas where QE finds a home. So you've got these names like Google, Facebook, Amazon, etc., which
hey, Dr.
continue. Yeah.
You can also see the NDX broke out to an all-time high on Monday. So, and that turned out to be a big fake out. So the narrowness there killed the market. Anyways, go ahead.
Yeah, and so you see this growing divergence, which is more and more troublesome. We've seen growing divergences like in 2007 at critical junctures, which did not end pretty. And of course, this time we've seen growing divergences, but they kind of persist. And starting in 2013, when the S&P couldn't muster any sort of meaningful correction really beyond 5%. Because of the QE factor, which created shallow floors. And then 2015, again, was a lot of trendlessness and go nowhere action. And then, as we wrote that report recently, the S&P has never had a less volatile period than it has since July. So we're going into, well, over 3 months worth of a period where the S&P has corrected a maximum of 3.4%. It's basically turned the market into a volatile mosh pit, which you probably noticed over the last several days that the major averages, at any rate, will collapse and appear that they're going to split wide open, or let's just say they aggressively move lower, then look like they're going to move a hell of a lot lower, and yet regain their footing just as quickly, and then rush to the upside, and they keep doing this back and forth. So it becomes a bit nauseating for anyone who's trying to use the indices as any sort of meaningful guide. But as we've said, you have to let your stocks tell you what to do, and there continue to be profitable setups both on the long and short side, regardless of what the market averages want to do, and regardless of how they're manipulated. And you'll notice that the essence of the markets, the way they've been prior to November 8th elections, at least the public's conditioned to think this, is that we can't have a collapse because the PPT, as it's referred to, will make sure that that there is a floor on the markets, because they don't want to see markets collapse just before the elections. And that said, I mean, markets are going to do what they're going to do. So if there is some kind of wild card news event or something that catalyzes things to the downside, or maybe you just start to see a stampede and exit of institutional big money heading for the door, then we will see the markets come off. So I don't think you can make any assumptions here. Again, and making an assumption is trying to predict the future, which does not exist, and you get into trouble for that. So just watch your stocks, your leading stocks. The stocks on the focus list are good bellwethers, and obviously it's an indication that a number of those names had to leave the list over the last couple of weeks, and how almost no new names were added to the list, and that tells you right there that the internals of the market are not healthy whatsoever. So that's a very good barometer to use in terms of market internal health. And where we sit right now, I think if we don't get any kind of meaningful correction before November 8th, and I'm not saying we will or won't, I'm not saying anything about that, but let's say we don't, then I think it is possible that there are increased odds of a correction, because the status quo has less of an interest in keeping the markets propped since the elections are now done, since they're over. And it'll be an interesting outcome, regardless of who is elected, to see how the markets handle it. Now, as far as the precious metals, you can see that on gold and silver and the miners, GDX. GDX bounced off its 200-day, then turned right back around, and now is hovering right at its 200-day again, so it's retesting. It's not looking healthy. GLD has an anemic upward drift along its 200-day, so that also looks like it's quite vulnerable. Silver the same. So, and then we also saw that bonds like the TLT broke down once again, meaning that yields went higher. So this is telegraphing, the market's telegraphing that it believes that there is going to be a rate hike potentially in December. The Fed futures do telegraph. I haven't checked recently, but I know that the last they telegraphed was about 70% odds of a hike in December. And the markets are forward-looking, so we could see a correction of some sort ahead of that December announcement. We'll have to just wait and see what plays out. And on that note, let's talk about some stocks here. Gil?
Yeah, my view right now is just based on what's going on with the stocks. And if you look at, I mean, we just break it down to what was the hot leadership back in August and really making this market rev up. You've seen, Kacher and Twilio and a number of other names that have started to break down. And even like something as simple as Adobe, has a breakout and fails. Now it's rallying into the 20-day. That almost looks like a failure that you could short into right here. So that's one on my watch list on the short side as a possible flag-based failure. And you can see on the weekly chart, that's what it looks like. So it's showing those signs. And I think on a concrete level, this becomes a short right here using either 10-day at 108.53 or the 10-day or the high of the day. So, I mean, it's just above the 20-day line, so I wouldn't be surprised if it rolled back over. So, and I'd watch some of these stocks that are gapping up on earnings. Yesterday, if anybody was watching this one, it had a 620 sell signal somewhere around 88, just under 88, and it reversed on day, so that was good for a scalp. Today they're rallying it again. I saw some news about Kramer on his show was pitching it, and I would watch this for a possible re-entry. I'm looking at this. I don't carry things overnight, and based on some of the things happening today, I'm glad I don't. So it allows me, this kind of a rally allows me to set up again. So that's what I'm looking to do today. So I am set up in a couple of names here. I'll get to that. But you can see the stocks flashed a 620 sell signal early in the day, and now it is trying to turn on you. So if you shorted it earlier in here, you'd probably be covering, I know I would. And you also had a MACD stretch here. So if somehow you caught this move, this is telling you maybe you're not going to have success shorting it just yet. You may need to wait for a rollover here, which I think is a possibility. So that's definitely one to keep an eye on. Workday is another one. Yesterday I did the same thing. Gapped up, I think, in sympathy with now. And you can see it rallied above the 20-day line here. And let's make this a little bigger. And that was a short sale point. So it reversed. That was another good scalp. It undercut this low, so you could cover there and wait and see what happens tomorrow. You get a rally today, and now I'm watching this thing coming up towards the 50-day line. It's already run into some resistance around that level, so this may be a short sale point to keep an eye on. Salesforce.com is another one. Yesterday it rallied, and it reversed pretty cleanly at around the 76 level. You can actually see it on the chart. It reverses at the 76 level, and it's just hanging around the 200-day line. Notice that the 50-day line has crossed below the 200-day line. So if we look at the 620 here, where I'll start shorting these is, and I'm actually short this one up here. Maybe I'm making 10 cents or something right now. But where I'll start shorting them is if they're gapping up, the first thing I'll look for is either a MACD stretch on the upside, which you kind of get here, but then it'll stretch and then it'll cross. So I'll test if it's still hanging near the highs on the MACD cross, which you can see down here. Here, let me use my pen to maybe make it a little clearer. Choose pen color. We'll go with black. And here we go. So here's a MACD stretch here. And then you get another on the upside, the MACD stretch here on the upside. So that occurs right around here. But it keeps drifting higher, okay? And as it's drifting higher, it's near the highs. You get the cross here. So that's where I'll test it out on the short side. So another one I'm testing out on the short side, we'll see if it just doesn't have too much momentum here, is Gigamon, which actually was a short yesterday. And you could have caught this pretty nicely early in the day. It was actually up. It rallied a little bit, and then it, today is what, the 28th, so this would have been right in here. We had a sell signal early in the day around 51, and then the thing just broke down. Busted the 50-day moving average, but with earnings coming up, I'm sure as hell not going to hold something like that. So the thing's gapping up today. It's back up to the highs near 56. So this might put it back in a shortable position if it reverses on the 620. So let's take a look at this now. You can see so far there is no sell signal, but we did get a stretch up here and a cross. So put some out there, and we'll see what this thing does now. But I would be watching for a clean cross to the downside. They came out with a decent number, but it's their growth is going to slow down pretty sharply over the next few quarters, and it's had a pretty big run. So I'm thinking you get a pop, maybe a bunch of people got short the name yesterday, and they all get squeezed today, and it'll turn. So I'm willing to come after this using the 620 to guide me. And you can see that you don't really get a sense of trying to short into this rally until you get close to 56, which makes perfect sense within the context of the daily chart because that's right along the prior highs. So, you know, my guess is you're not going to see it get past 56 if it's going to reverse. So watch for that. So, I'm also, another one I shorted this morning, although this may sound a little weird, I actually was working it yesterday, is Qualcomm, which this morning opened up around 71.20 and immediately got a sell signal. So you come after this. I was actually shorting this in the pre-open at 70.60, and then it opened up and pushed down before the opening. So this one is working so far. But the thing is, they're going to yesterday announced they're going to buy NXPI for $110 a share. But you might notice, anybody who is watching, you might have noticed that NXPI is getting bought out at 110, but it's sitting here at 99.92. And I think the reason for that is there's 17, somebody told me there's 17 jurisdictions or whatever that it has to pass approval through, and it may take until 2017 for the merger to go through. So on that basis, you know, it's not going anywhere. But I thought it was odd that Qualcomm would rally like this and gap up to a higher high. And I have liked this on the long side before. You guys probably remember that from the last couple of webinars. But to see this thing gap up on that news struck me as a little bit odd. So it looked like a short. So if I got a 620 sell, I'd hit it. And this is sort of a contrarian approach to short selling, mainly because in this market, when you see a breakout, that's often a place to short things. You know, I know Ambarella is a good example of a breakout that you saw that looked really good on a stock that was coming up the right side, whoops, of its pattern. Let's take a look at this here. So it's coming up the right side, and it breaks out, and that turns into a failure point. You can actually short the stock there. I think this one's hard to borrow, but in any case, you have Qualcomm doing the same thing, coming up the right side of a big base. Let's see how big this is. Yeah, it's still pretty ugly. That's a ways. So it's getting up there. You know, it's had a big rally. So for potential failure on a breakout attempt to occur, that seems like the odds might be there if I can pin it down on the 620 chart. So that's how I'll come after some of these things. You know, it's unorthodox, but in this market, you sort of have to think in a contrarian way, because just when things look like they're going to fall apart, you'll see them start to rally, and when things look very strong on the upside, then they break down very rapidly. So you have to maintain something of a contrarian, say, posture in the face of a market that is very volatile and seems to swing back and forth when it, you know, looks good, and that's the end of the run, and then it looks bad, and that's the end of the pullback. So I know everybody's expecting the market will be held up until the election, but Dr. K, we were talking about this earlier. You're telling me that there are a number of underground polls are actually showing Trump ahead by a wide margin. Is that true?
Yes, from what I understand, and of course they're suppressed. I mean, they're not mainstream polls. The mainstream
No.
polls are, from what I understand, quite manipulated, and as Google has also, with its search engine, has certain metrics that they've put in that allow for certain biases to occur when you're doing
Right.
searches for candidates. And again, this is not conspiracy theory stuff. It's just like Facebook. I mentioned that Facebook controls their news feeds based on what you're putting up there. And I mentioned this years ago, but I learned a long time ago just not to say anything, because at best, people just say, oh, it's a conspiracy theory, which makes you look bad. And then later on, when it's proven to not be a conspiracy, let's just say when it's proven that the conspiracy theory holds true, it doesn't matter, because then it's mainstream, it's mainstream belief. So,
yes. Okay.
plus, talking about this stuff is not the wisest decision. I mean, people are, and I've been saying this for years, well, at least in London, people are completely surveilled. There's a state of surveillance. It's been ongoing for many, many years. It just
Right.
keeps building. And we all know that as well. So,
Well,
but
so here's my thinking. Okay, if the reality is that Trump is ahead and it may win, don't you think the market, if the market fears this, don't you think the market would sell off ahead of the election in anticipation of a Trump win? If, as so many Wall Street pundits allege, Trump is bad for the market. I personally don't really see why Trump is necessarily bad and Clinton is good. To me, they're both probably to some degree going to be more government spending, more debt. Although Trump says he's going to fire the Fed, so maybe that's what scares everybody.
I think that the majority right now believes in the mainstream polls. Why wouldn't they? The underground polls are underground, so that would attract only a minority. So I think the market right now believes that the incumbent party will win, and the markets continue to hold up, and the economy supposedly has been on the mend, and so Obama's done apparently a great job, et cetera, and people do vote with their pocketbooks. If you look back over 100 years of elections, the deciding most factor of which party wins is based on the economy. So if the economy is doing very poorly, then the incumbent party is voted out. And that's been the case, and so they've painted this picture. They're really good with the paints, I got to say. They paint this picture that the economy's doing better than it really is, and that, of course, the markets are doing better than they really are by way of QE. And consequently, with using all this paint, they've painted themselves into a corner, nasty little tight corner that people no less than Jimmy Rogers, Alan Greenspan, Ed Seykota, Bill Gross, and on and on. These are all highly respected individuals, have all chimed the same chorus saying that this is not going to end pretty.
No, I don't think so. Anyways, getting back to my theories on short selling. So you have that breaking down. Maybe that's going to come in. So I'm just watching this, or it's coming towards the lows of the day. Qualcomm is. I don't know if I just cover it. We'll see what happens. You have BABA coming out with earnings next week. They're hanging along the 50-day moving average. I don't know if this is going to magically lift off the 50-day, or we see it break down after earnings. You can see that it's in a big sort of cup, pod, punch bowl formation, and near the highs. So it's in a position where, I mean, this I would call, a big cap type pod. It rallies all the way back to the highs, and that's pretty close. Well, still got a ways to go before it gets to its ultimate high. Was what was that high? Around 120, yeah. And so we're at 102.37. I don't know if it would get there after earnings, but this is another one that might be failure prone. So like I was talking about last week, if you guys remember, when I was talking about the fact that you couldn't really come up with a firm strategy, although things were looking like they might be weakening. So in that case, you'd want to be watching for late stage failures. So, and a good example of one is this failure here, but of course the earnings turn it around, but that's one example of something that happens. Adobe is another example. And of course, you can see, go back and look at the abject failures on attempts to break out by Acacia, and then of course Twilio, and how those become short sales as soon as they bust below the breakout point and the 20-day line. So nasty looking stuff in general, and I think the market in general is, under the hood at least, is telling you that things are worsening, not getting better in the market. Therefore, the general market may be heading lower. You have this name like Weibo starting to push below its 50-day moving average. Momo, which has had a lot of Momo, is doing okay. It's hanging in there. Maybe that puts it in a buyable spot. So, I mean, the very least here, if you wanted to buy something, this is probably in a good spot, and you could use a 10-day line or the 20-day line. It's reasonably tight stops. But expect that if the market starts to break down, you're going to see these turkeys come off as well. So, and things are still kind of choppy. I mean, I'm just looking around in general, have some shorts out here, just testing the waters. Not a hell of a lot going on here as things kind of bounce around. I mean, Qualcomm's come in nicely. Gigamon is just kind of hanging up there. Let's see if it turns. Salesforce is, let's take a look at that. Still up near the highs, but you have a cross here on the MACD. So this may be the end of the line. We'll see if it rolls. You could test some here, but just keep a tight stop. And again, on the short side, I'm willing to put something out, and if it just keeps pushing against me, I get out of the way. The one thing, as I've always pointed out about the short side, when it works pretty easily. It's not that difficult. So like yesterday, you could get 620 sell signals in names like Now and Workday and CRM and other names, and they all just pretty much plummeted to the downside from there, or just steadily moved lower. So those actually worked pretty well. And today you might try and put something out on a 620, and I don't see any 620 outright 620 sell signals. You're seeing some MACD crosses, which may tell you we're reaching a near-term peak on an intraday basis, but we'll just have to see how that pans out. What else here? And if you look at, like today, you had Electronic Arts is gapping down on earnings, so that's bringing down ATVI is coming off down to the 50-day moving average, and these were actually pretty hot names. Take-Two, another one that's coming off the peak. I think I talked about this one last week as a possible short as it rallied up into resistance here. Oh, let's see here. Here's one comment. If Trump wins, we may see a Brexit-type sell-off and then a year-end rally. I guess if you're into making projections, I don't really have any projections to make, although I wouldn't. My general view is that everybody seems to think that there's no way you can have a sell-off before the election, and I would say there's plenty of ways you could, so anything could happen. And we're already seeing what I would call a stealth bear market in a number of names that have broken down. So, and you have the big cap, most of the big cap Nasdaq names are acting okay in most cases. You have Netflix is very tight after pushing higher following the Bible gap up. Facebook tried to break out last week and came in yesterday, kind of looked like it was failing, closed below the 20-day line, and now you're back above it and pushing out back to new high ground. So that's a little funky that you know, the way it looks, it's breaking down and it pushes back to the upside. But I think in some of these bigger cap index names, you'll see support come in. I think that's probably what's happening today. And a lot of this looks like money is just trying to support some of the big stocks here and there to keep things from coming apart, you know. So, but that doesn't really keep everything from coming apart, because Amazon, which was a big leader, is now busting it, but it's had a long run, so this could become a short sale target. You're looking at a rally up to the 50-day line. So I would say, from just the pure perspective of looking at setups, I think that you're seeing more short sale setups showing up with stocks breaking down, and that alone is telling you something about the market here. So I think in that case, you sort of have to heed the warning of individual stocks, and obviously if you owned stocks like Twilio and Acacia, you're long gone. If you're still sitting in them, then you really are an idiot. So, and you probably should not be investing at all, because it's clear you have no concept of stops if you're still in them and you bought them higher. I guess if you bought them a lot lower and you're still in them, maybe that's a little bit of a different story. But you know,
Yeah, I just wanted to say, generally speaking, the number one, well, not generally speaking, the number one rule in investing is risk control. So whenever you enter a position, as we've said time and time again, always know your exit point. Therefore, you always know your probable percentage loss in that position, and that's why we've advocated buying on constructive weakness, because then your risk should typically be at no more than 5%, and typically maybe 2 to 3% on a position entry.
Yeah. So you have that busting. Let's see, Google came out with earnings. I always look at Google with an L, and it's trying to break out again. Notice how it was looking kind of funky and then was able to come out of there. Let's see. Baidu was another one. I saw it down after hours, but look at how this has gapped up on earnings and now has reversed, and it's sitting right at the 50-day line. Does this become a short sale target? Well, potentially. So, okay, let's see. Amgen also is another one that blew apart today. Look at that. That's brutal, and that's what that looks like. So I think these other names are going to, Celgene rallies up, gaps up to the 50-day line, and that may become short right there. So I think the other thing to think about here is where you see prior weakness and you see some sort of a gap up on earnings, then you might look at using 620 chart to figure out where you might want to get short, test the waters on the short side if you get some sort of a 620 sell signal. So that would be my my general approach. I don't think breakouts and gap ups are things to really be buying. Netflix is one that worked, but those have been far and few between. So I'm a little skeptical of buying into strength as I have been for quite some time, I think. I think in general that's been our message, right, Dr. K?
Yeah, it's been what the markets have telegraphed for at least the last couple of years. And I wrote a piece recently about how, the secret, someone wanted to know, do most people lose money in the markets? Yeah, they do, because even if you have a cycle like the late 90s where you do really well, those people, I think invariably everyone gave their what they had made back to the markets, because people are not flexible. They get wedded to a strategy, or they get wedded to a bullish or bearish position, or they get wedded to a stock, and that's a recipe for disaster in the long run. So you got to stay fluid with changing times. Markets, the only constant in markets is change. So, and that, of course, that's why I think we've done this as long as we have. I mean, over more than 25 years, and the market still holds our interest, deep interest, because it does change. It always does offer new challenges. It's not a static black box kind of system. So I think, who used to say, I know O'Neill used to, but I had a friend who used to say he was going to trade the markets till he drops, because that's his passion, and that's great. I mean, that makes a lot of sense. If you found what you love to do, why not do it?
Well, who you talking about, Bill O'Neill? I don't think he's trading.
Well, I know he would he wouldn't say it like that. I had a friend who said it like that, which I thought was a very colorful, succinct way of saying it.
That's how I may be. I don't know. I mean, you retire eventually. Anyways, let's get to some questions. We've got AutoZone. Well, this is already broken down, so if you're going to short it, you had to short it on the rally up into the 20-day line. Last week I think we talked about this one, remember? And someone actually identified this. I was very impressed correctly as a short right at the 20-day line. It was exactly 1 week ago, I believe, last Thursday on this day, right at the peak. And you could have shorted that. You even got another chance to do so on Monday on the rally right into 20-day. And look at that busting apart. So that looks pretty gruesome. So that's one breaking down. But, ORLY, that's already a bust here also. But coming up to the 200-day, so maybe it becomes a short there. But these are also more leading stocks that are breaking down. You can see ORLY is busting. AutoZone, another one in the group, has been failing. So, that's my point, that underneath the hood, this market does not look very happy. It's a very unhappy camper, shall we say. Anyways, I'm watching this GEMO. It's still going, so I'm going to just back out. See what happens. That'll be the point where it inflects back to the downside. So yeah, you're getting a little intraday breakout. Still no 620 sell signal. So I don't know. Putting a little out at 56 or so didn't strike me as a bad idea. So you'd be slightly down at about half a point. It's not that big of a deal. But I guess we'll see how this plays out. But my guess is it should come in. But when exactly is hard to tell. I don't know if it just keeps going higher on the breakout. But remember, breakouts have tended to fail, and when this thing has shown strength, it will tend to reverse. But we'll see. I mean, it's still early in the day. And I know where my out point is anyways, so 2% up. You guys have thoughts on long-term support for CMG? why do you want to buy CMG? You know, long-term support. There ain't any support in this thing. That's a gap down, a shortable gap down too. So I'm not quite sure why you're asking us about long-term support. I don't even play that game. That almost seems like something that a fool would do. You know, if you're trying to bottom fish, look for a concrete turning point, and as Livermore would say, a pivotal point. You know, so long-term support. Do you have any thoughts on long-term support on this stock, Dr. K?
Actually, it's funny. I wrote a piece because someone wanted to pretty much had that question. You know, what do I think of this stock at this juncture? And you know,
if you still own it, you're screwed. And if you bought it up here, you're screwed. And you're definitely a slow animal in the herd.
Yeah, and I mean, of course, I first said I don't give personalized investment advice, but then I just thought, well, geez, this person needs some they need some help. You know, we've all been through a learning curve, and unfortunately, they're on part of the learning curve where they definitely need to be helped.
Yeah.
So, no, I actually sent the links to where we had. We like the sweet spots on the long and the short side, and there was a report we sent out. There were two reports we sent as pocket pivots, which nailed both of the sweet spots in Chipotle, and then we also sent the short sale setup report, which was good for
that was a long time ago.
Yeah, and because Chipotle, there's really been nothing to be done in Chipotle. The two reports we sent out on the long side, one was in 2010, one was in early 2012, and then on the other side, we had the potential short sale setup, which then did, you know, eventually collapse, and that was in late 2012.
Right. Well, I think if you're looking at long-term support here, it looks to me like it's down here around 40 bucks, 38, 39. Yeah, there you go. So there's your long-term support. That's kind of a weird question. But I guess, you know, that's a new question.
It's unfortunate that that is kind of the way of things in this market. That I think people get really screwed up with just all the information the market's been dealing out, and a lot of these strategies that don't work continue not to work, and the ones that did don't work anymore. So yeah, I think it's easy to get very dizzy in this kind of market environment. It only gets more challenging.
I won't assume, someone's saying, aren't you assuming member owns it? Well, if you're asking where long-term support is, are you really trying to buy it? I think if anybody really understands how we look at the market, then thinking that we would be trying to find or we would have any thoughts on long-term support for this as something to buy, it doesn't really understand how we operate in the market. So what you really would be looking for is some sort of a bottoming signal, you know, in a turn, and it really hasn't had that. I mean, it's been a nightmare stock. All right, here comes Gimo back down to my short entry point. So, but I think it still might work. We'll see what happens. I don't know. The luxury I have is I'm up double digits, decent double digits for the year. Not huge, but up decently, and I have some cushion. And I really, whenever I come off, I only come off like 2 or 3% off my peak. So my drawdowns are very well contained. So I'm always in a position with when things get funky to test things out. Anyways, people are sick of fake Mexican food. I agree. I mean, this place sucks. Mama Morales would not approve. Okay, just to let you guys know. And I've seen it. It's like yuppie. You know, white liberals try to do Mexican food. That's basically what it is to me. Anyways. Okay. And I'm going to sue them for appropriating my culture. Can I do that, Dr.? I can sue them, right, for appropriating my culture. Isn't that the new thing? I heard that you have to wear, you have to have your costumes approved, and at Tufts University, if they don't approve your costume and believe that it could cause someone to feel, I don't know, bad or harm, unsafe or whatever it is, that you can actually be, they'll have the campus police come after you. Is that true? Anybody hear about that?
You know how the U.S.
I think my kids were telling me about that. I thought that was just utterly hilarious. Is that true?
Well, you know what? Here, this is what I'll say, because I've learned a long time ago not to talk about a lot of these things. Just Google it and do your own homework. I tell that to everyone because I mean, I get information that a lot of people don't sometimes, and I know it's concretely true, but it's not something I'm going to talk about because it's not believable. And then later on, maybe it becomes true, and
Right.
it's equally unbelievable. But there are so many things that have happened in this world, especially over the last few years, that are completely unbelievable, but nevertheless absolutely true. And it's just the way of things. It's, you know, I always go back to the simplest way to say it is Ed Seikota's 39th day concept. We are at the 39th day, and this is what happens when you're this close to
The end of the world.
I call it big transformation. Other people call it big collapse. But I think with collapse comes great transformation.
Okay.
So.
All right. Let's not wax too philosophical here. Okay. So any other questions here? Somebody said they went into Chipotle 3 years ago. Tables were dirty, never ordered, and never went back in again. So I think I went there once, and I just decided it was not real Mexican food. So anyways, any other questions? I mean, you know, I put out through some of the names, or showing you guys some of the names I'm watching for as short sale setups. So Adobe is one of these, and it's pushing the high. Let's take a look at this, because this is one, as I pointed out here, it's coming up into the 10-day and the 20-day, and so that's what it looks like on the 620. So you had a cross here, not too far off the highs, but they're just kind of hovering there. That's what you're seeing with a lot of these. Initial cross, they're just kind of hovering there, so they could start to break, or, you know, they could continue higher. We'll just see what happens. But I'll start testing the waters here. The only one I'm pretty heavy on is Qualcomm, mainly because that already gave me a clean signal earlier in the day. So anyways, let's see. Truckers acting better, ODFL. Yeah, they're gapping up today. That's what they look like on their charts. So coming up the right side. But, you know, are you going to buy truckers? I guess you could for a trade if you're nimble enough. I noticed, so the rails are getting tagged, have been. You got UNP, I think. Norfolk Southern also coming in. CSX is another one. Is that right? No, is CSX a rail? Help me out.
Yes, it is.
Yes, okay, good.
It is.
No, I don't think that, you know, truckers acting well relative to other areas of the market. I don't think that's necessarily confusing. It seems to me that it's very much in sync with what this market likes to do, which is just rotate around. You know, you'll see they fly into the big cap Nasdaq names, and now the last couple of days with names like Amazon, for example, and Apple, and even Tesla, which I thought was interesting yesterday. I would have played this both ways. I actually got long this thing around 210 early in the day, and then I saw it rally up, and I could see it run into resistance a few times up there on the 620. So, for example, it was up here. Wait, where would it be? Yeah, there's a move. And then intraday, I noticed you're just getting a lot of resistance up here, so just puke it. And then you had a 620 sell right here, so you could have shorted it, but I couldn't borrow the stock, unfortunately. And then the thing just came all the way in. So this is looking like a short again, and this is what it looks like on the big weekly chart, because you can see this is, I don't know, you want to call this a complex mountain range top, or you got a fractal head and shoulders in here. And this looks to me like a reversal here, and you're just going to break down through support in here, and this thing's headed lower. So they didn't they do some creative accounting to get their earnings up to, what were they up? They were up like way above estimates, weren't they? They beat estimates by 69 cents or something like that.
By a huge proportion.
Yeah.
Yeah, a couple 100% they beat estimates. So
yeah, but that, you know, that's probably manufactured. And I was thinking, okay, if this is legitimate, maybe this thing's got a shot. And yesterday when I went long, I thought, okay, if this thing isn't holding the 213 level, then I'm just out of here, because it could turn into a short very easily. And I got lucky and I dodged that turkey. So, but I couldn't short it because I saw when to go short, and I couldn't get a short off because I couldn't borrow it. Anyways, so let's see here. Market just chopping around. Look at now. Let's keep an eye on this. Another one on my radar as a possible short. See how it's pushing higher? So nothing really there yet. But I'd watch these, because a lot of these things will fail later in the day, and it's possible the market could fail later in the day. What is the reason for the rally? The strong GDP number? Anybody know?
The reason for the rally, I mean, that's part of it. I think it's also that, the market's been absolute mush since July. And so, look at all the rallies we've had since July. We've had many, many rallies, but we've also had many, many setbacks. But overall, the market, the S&P hasn't corrected more than 3.4%. I mean,
Yeah.
it's a mushy market. So
Yeah,
trying to
that's true.
find a reason behind what the market's doing in this kind of environment
The Wizard of
doesn't.
Oz working the
Yeah, pretty
levers of the
much.
market. Yeah, the QE Wizard of Oz, the Wizard of QE. That's it. Can you review AMD for pocket pivot earlier this morning? Well, what is there to review? I don't see a pocket pivot just yet. You'd have to have higher volume than you had 6 days ago. You did have a pocket pivot 4 days ago, however. So you pulled into the 10-day. I guess if you liked the stock, you could have bought it there. But it's probably on track, given that it's only 8:42 our time, so you're barely 2 hours, a little over 2 hours into the market day. It's probably going to probably post a pocket pivot, but it's AMD, so it's had a big run. You're going to make big money here. I guess if you like it, then buy it, but where's your stop? At the 10-day line. There's really nothing else to say. So like we have some magic knowledge that's going to go higher. I don't know. Like I said, I'm skeptical of this market, so I'm really not in the mood to get long anything outside of a quick trade. If I can get it, like Tesla was yesterday, and that was good for like $3. You're not going to get rich that way. That's for damn sure. Anyways, any Mellanox had EPS. Like I said, what I think is interesting is everybody wants to buy something. What's wrong with you guys? Can you see what the market's doing? I wouldn't be buying this thing. I'd probably short it at 44. It doesn't look that great to me. That's what it looks like on the daily chart. I'm sorry, the weekly chart. And you can see it's kind of a head and shoulders. And you're flopping around along some right shoulders here. You're at the top of the range, So, like I said, I think it's interesting that people are still coming at us with long ideas. Where's long-term support on CMG? There's a pocket pivot here, a pocket pivot. Well, most pocket pivots have gone down the toilet. Let's look at, here's one that was starting to work a few days ago. It had a pocket pivot here that stalled. That would have been 1, 2, 3, 4, 5, 9 days ago. And then 5 days ago, you had a pocket pivot as a push to higher highs on a closing basis, and then you yank back in, and now you're trying to bounce off of there. So, you're not getting a lot of juice on pocket pivots where you see them. And it seems to me that it's all kind of, nothing's getting any sort of upside momentum. So, I mean, Netflix is probably the only thing, in my view, that's showing any real upside momentum, sustainable and pushing to higher highs. But, if somebody doesn't buy these guys out, then maybe it comes in. So, all right, getting them on back below 56. So, I don't know, you got to give these things a little bit of room when you put them out, but you put them out in relatively small size, 10%, 20 max, and just kind of let them flop around for a little bit before you get some sort of a sense of whether they're giving way. What I like about stocks that rally for most of the day is that what happens is they get set up better on the 620. Like early in the day, things may bust to 620, and a lot of times you'll have a sell signal, but the stock will be way below the cross. Here, you're likely to get a cross very near where the price is at the time. So the entry, if you try to get aggressive on this, which I don't know, we'll see. Most people might say, Gil, what are you doing? You're shorting into this move, and that's because strength in the market generally doesn't work. So if you give me a spot where I can come after it and control my risk, and I would say maximum risk I would tolerate to the portfolio is like 1% or so. So nothing terrible. And then look for a reversal. I think if you get one, this thing's going to come in very fast. So that's kind of what I'm looking for. So kind of like set out a little here, and if it starts to show some confirmation of reversing, I might just come after it with a massive 200% position. Yeah, right. Like we can do that in this market, and then it'll turn and someone will buy it out at 100. Okay, I'm watching Facebook here. Facebook pushing to higher highs on the day. Look at that. There's no news on this, so they're just jumping into it. And I think it's part of just supporting the market. They come after the big stock names when they need to support the market, and that's what's going on right now. But it looks funky. I got to say, it looks very funky. And I think I've talked about this idea of alibied selling, where you've seen the indexes sell off on some news. I think there was news here, Deutsche Bank or something. And then, of course, when the news turns out to be not so great, the thing reverses and goes higher. And then you sell off again on some news. And when the news turns out to be not that big of a deal, it rallies back to the highs. But again, this is where big money uses the news. They sell, and there's an alibi for the news, but they know that the news is probably not going to pan out into anything serious. So you get a rally, and then they can sell into that again. And you do that a few times, and then eventually you've distributed out all your stock, and the market is ready to tank. So, and I've thought that for at least the last month or two, that there seems to be some sort of alibied selling in the market where they sell it on some news that when you think about it, it's like, why is that such a big deal? And then when it turns, because like with Deutsche Bank, Dr. K, when they are talking about they're going to have problems, I mean, you kind of knew that, okay, if Deutsche Bank is on the verge of going under, guess what's going to happen? The cavalry is going to ride in, printing more money, pulling their see, there goes
Yeah,
Qualcomm now.
they're too interconnected, so that the
Yeah, so
the
that's
cavalry
going to
will
happen,
protect them.
right? So when I saw that, I thought, okay, they've got the reason now to push this thing back to the upside, which is going to be that, well, don't worry, if Deutsche Bank goes under, then everybody's going to start printing more money, so we're saved, and that's kind of the BS line. But you kind of are seeing that in the market, and while this is going on, okay, so I have this theory that's been my bear theory, okay. And the only bullish theory I could really come up with more recently was the idea that you might see a rotation in the big stock, big cap Nasdaq names as sort of a safe haven, but it could drive a rally for a short period of time. Well, guess again, because that didn't really happen. You may have Facebook rallying, you may have Google rallying, you may have Netflix rallying, but you have names like Intel, Apple, Tesla, Amazon all busting. So it's not really it's kind of a mixed bag there. So you're not guaranteed of making money if you delve into the big cap Nasdaq name. So that's not really an area of massive rotation that's driving a big rally. Meanwhile, that's that sort of lame bullish theory that I had hasn't really panned out. In the meantime, you've seen a lot of stocks break down. You see the Acacia just keep making lower lows. You keep seeing stocks like Adobe and other ones breaking down, and Electronic Arts breaking down, and Weibo starting to break down. Excuse me. And so, under the hood, the market's getting weak. And if you're in the wrong stock at the wrong time, you could have some fun on the downside. So I thought Acacia, for example, we talked about this over the weekend. You had an undercut of this low, which led to a nice 7, 8, almost 10% rally in one day. Of course, that's a tradable move. I wouldn't really look at that as a long-term entry, especially with earnings coming up. So I'm not going to sit through anything through earnings. But you see this thing bust wide open yesterday, and it isn't rallying. So now it's filled this gap from way back in August, and it's still unable to push up out of there. So here's a gap. It's filled it pretty much, and it looks like it wants to go lower. So and remember last week we were talking about somebody I know sent me this big analysis of Acacia and Twilio with a precedence analysis showing other names. I can't remember the other names that supposedly look like Twilio and Acacia, and showing you how much higher they're going to go. And look at these things now. But all that stuff just doesn't work, it's look at Twilio now undercutting the low of this flag here, so you're down, and maybe now you're going to get some kind of a bouncy rally, so you can try and come in for that if you think you might, if you want to trade it. But I'd look at this, what a mess on the 620. It's in a sell signal right now. Maybe if you got some sort of turn, you could try and see if you get an undercut and rally now that you're way down under here. So, but this just looks bad, Anyways, even what about this NTNX? I'd like to know who the idiots were buying up around 46. They're having a good time now, aren't they? Anyways, SQ, you're dreaming. Stealth ugly. I don't know. I'm not going to buy this thing. Maybe it's a big head and shoulders. Like I said, why does everybody want to get long stuff here? I think the risk is high, and if you're testing the short side, that's not always black and white either, and not always all that simple that way either. So I think in general, getting too aggressive one way or the other probably isn't advisable. And trying to buy junky stuff, and I'm going to say this is junky because if it's going to go, it should have gone a while ago. They have earnings next week. Maybe that drives a rally, but I'm not. So 20-day line is like a stop. Is a stop. 20, you mean 200-day? Well, if you wanted to trade it that way, I guess that's how you could do it. But why do you think that you need to own this and that it's necessarily going to go higher? Maybe it doesn't. Maybe it doesn't. But in this environment, I'm not really in the mood to own stocks in a big way. So anyways, I want to get back to trading. So that's basically all I have. I covered some concrete situations on the short side to look at. And we'll just see where this market goes. But right now, if you're not playing the short side or trying to, the long side may give you some trades here and there if you're a nimble trader. But to me, the general gist of the market is that there's not a lot of really solid setups, and you don't really see a lot of follow-through necessarily on the upside. So there's no reason to get heavy long. And if you're going to test the short side, I think you're also going to have to remain quite nimble and not stay in positions overnight necessarily, or remain big overnight on the short side, because the market's still funky. And you can see, like we had on Monday, you get a big gap up out of nowhere, and things are just all over the place. So my view is take it cautiously. When you see some setups, you might pick off some stuff on the short side if you're oriented that way. But for the most part, wait for your shots and be very cautious. You got anything else to add, Dr. K?
I think that pretty much sums it up. I mean,
All right.
We are not in the easiest of environments, but you got to pick your spots and make sure that your risk when you do enter a position is well contained, because the hit rate in this environment is probably reduced because of the mushiness and the volatility. And again, change is the only constant, so this cannot continue. If it did, it would pretty much be the first time in perhaps hundreds of years of market history, because change always does occur. So it's just got to be patient and pick your spots.
So thanks for showing up. You guys have a great weekend, and we'll just see where this silly market goes. And it is a silly market, but you got to say one thing: it is entertaining. So and even the election, a lot of people say they get depressed over the election. I just think it's kind of one big comedy show. So anyways. Thanks for showing up. You guys have a great week, and we'll catch you next week.
So long, everyone.